The next financial revolution probably won't start on Wall Street. It's already happening online through decentralized finance, a system where people can lend, borrow, trade, and invest without traditional banks. And while most people still don't fully understand it, billions of dollars are already flowing into it. This is DeFi, and it could completely reshape the future of money. But here's the question. Is decentralized finance truly the future? Or is it just another crypto trend surrounded by hype? Because depending on who you ask, DeFi is either the beginning of a financial revolution or one of the riskiest experiments ever created. In this video, I'll break down what DeFi actually is, why it exploded so quickly, the biggest risks nobody talks about, and what the future of decentralized finance could look like by 2030. And trust me, some of these predictions sound straight out of a sci-fi movie. To understand DeFi, we first need to understand traditional finance. Right now, almost every financial transaction involves a middleman. When you transfer money, apply for a loan, use a credit card, or earn interest, there's usually a bank or financial company controlling the process. They approve transactions. They charge fees. They decide who gets access. DeFi changes that completely. Instead of relying on banks, DeFi uses blockchain technology and smart contracts. A smart contract is basically a program stored on a blockchain that automatically executes transactions when certain conditions are met. No employees, no paperwork, no waiting for office hours, just code running 24/7. Most DeFi applications are built on Ethereum because Ethereum introduced programmable smart contracts. But today, other blockchain ecosystems like Solana, Avalanche, and BNB are competing heavily in the DeFi space. Now imagine this. Instead of asking a bank for a loan, you connect your crypto wallet to a DeFi platform. Within seconds, the loan gets approved, collateral is verified, and funds are transferred automatically. No manager involved. That's the power of DeFi. So why did DeFi become so popular so quickly? Because for many people, traditional banking feels outdated. Let's be honest. Sending international money can still take days. Bank fees continue increasing, and millions of people around the world still don't even have access to proper banking services. DeFi offered an alternative. One of the biggest advantages of DeFi is accessibility. Anyone with internet access, a smartphone, and a crypto wallet can participate. It doesn't matter where you live. You don't need a high credit score, a bank account, or approval from a financial institution. That's why many people believe DeFi could help financially underserved populations around the world. Traditional financial systems move slowly, especially international transfers. But blockchain networks can process transactions much faster. In some cases, within seconds or minutes instead of days. And because there are fewer intermediaries involved, costs can also become lower. This was one of the biggest reasons DeFi exploded during the crypto boom. People discovered they could earn passive income through staking, lending, liquidity pools, and yield farming. Instead of letting money sit in a savings account earning tiny interest, users could potentially generate much higher returns in DeFi protocols. Of course, high rewards usually come with high risks, and we'll talk about that soon. But at the time, DeFi felt revolutionary. Money was becoming programmable. Several DeFi projects became extremely influential in the crypto industry. For example, decentralized exchanges, lending platforms, and stablecoin ecosystems. Platforms allowed users to trade crypto directly, lend assets, borrow funds, and earn rewards without using traditional banks. One major innovation was the rise of stablecoins. Stablecoins are cryptocurrencies designed to maintain stable value by being linked to assets like the US dollar. Popular stablecoins made DeFi much more practical because users could avoid extreme crypto volatility while still participating in decentralized systems. And this is important because the future of DeFi may depend heavily on making crypto feel stable, easy, and reliable for normal users, not just tech enthusiasts. Now here's where things get complicated. Because despite all the hype, DeFi has serious problems, and these risks are one reason many people still don't trust it. Billions of dollars have already been stolen from DeFi platforms. Why? Because smart contracts are written by humans, and humans make mistakes. A single bug in the code can allow hackers to drain massive amounts of money within minutes. Unlike banks, there's often no insurance or customer support. Once funds are gone, recovering them can be nearly impossible. This remains one of the biggest obstacles for mainstream adoption. During crypto bull markets, thousands of fake DeFi projects appear. Some developers launch tokens with huge marketing campaigns, attract investors, then disappear with the money. This is called a rug pull. And unfortunately, inexperienced investors often become victims. The decentralized nature of DeFi creates freedom, but it also creates risk. Governments and regulators are still trying to understand how DeFi should operate legally, and this could shape the future of the entire industry. Questions regulators are asking include: who is responsible if users lose money? How should DeFi be taxed? Can decentralized systems comply with financial laws? How can illegal activity be prevented? The challenge is that DeFi wasn't designed to fit traditional financial structures, and that creates tension between innovation and regulation. Now let's talk about where DeFi could be heading next, because this is where things become incredibly interesting. Many experts believe tokenization could become one of the biggest trends in finance. Tokenization means converting real-world assets into blockchain-based digital assets. This includes real estate, stocks, commodities, art, and even intellectual property. Imagine owning a small percentage of a luxury building in another country directly from your phone. No complex paperwork, no expensive brokers, just blockchain ownership. This could make investing far more accessible globally. Artificial intelligence could completely transform decentralized finance. Future AI systems may manage portfolios automatically, optimize investment strategies, detect suspicious activity, reduce fraud, and improve risk management. Instead of manually managing investments, people may eventually rely on AI-driven financial systems operating on decentralized networks. That combination could become extremely powerful. Something surprising has happened over the last few years. Large financial institutions that once ignored crypto are now exploring blockchain technology seriously. Banks and investment firms understand something important. Blockchain isn't going away, and many institutions are researching tokenized assets, blockchain settlements, stablecoins, and decentralized infrastructure. The future may not be banks versus DeFi. Instead, the future could involve both systems merging together. This is one of the most interesting possibilities. In the future, people may use DeFi without even realizing it. Think about the internet. Most people use the internet every day without understanding how servers or networking protocols work. The same thing may happen with blockchain. People might send money, invest, borrow, or earn yield through simple apps powered by decentralized systems behind the scenes. That's when true mass adoption could happen, when the technology becomes invisible. So, could DeFi eventually replace traditional banks? Probably not completely, at least not anytime soon. Banks still provide stability, regulation, fraud protection, and customer trust. But DeFi could force traditional finance to evolve much faster. Just like streaming transformed entertainment and smartphones transformed communication, DeFi could transform global finance. The financial companies that adapt early may dominate the next generation of banking, and the companies that ignore these changes could struggle to survive. The future of decentralized finance is still uncertain. It could become one of the most important financial innovations of this century, or it could face major obstacles from regulation, security issues, and adoption challenges. But one thing is clear: the financial world is changing rapidly, and understanding these technologies early could become extremely valuable in the years ahead. Now I want to hear your opinion. Do you think DeFi will eventually become mainstream? Or will traditional banks always remain dominant? Comment below. And if you enjoyed this video, make sure to subscribe for more content about crypto, investing, future technology, and the changing world of finance. Because the future of money is only getting started.